Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us here for yet another market recap on Friday, March 25th. I can't believe we're approaching the end of March. I'm, of course, joined by my wonderful co-host, Bruce Campbell with Stonecastle Investment Management. Thank you for joining me, Bruce.
Yeah, it's good to be back. It is hard to believe that we're heading into the second quarter here next week.
Okay, Bruce, I still have a pile of Christmas decorations I need to put away. And it's almost April and Easter, which is amazing. Hopefully, good weather comes with it. We haven't met. It's been 2 weeks. So there's lots to break down, lots going on, obviously, in the world right now. We're going to talk about Powell. He came out and said more stuff about rate hikes. We're going to talk about consumer sentiment slumps, investor sentiment, sorry. And then we're going to talk about a new acronym. I always love a new acronym. Everyone's accustomed to the one called FANG. We have a new one called MANGO. We'll tell you what it is. And then, of course, we'll get into some CSE issuer news. So let's start off with Powell. What happened?
Yeah, so he was speaking this week, and he talked about the fact that really the Fed is behind the curve, which is what most people think, and certainly the bond market's been telegraphing that, and that at the May meeting that they might have to be increasing interest rates by 50 basis points, and that was actually quite well received by the market. Most people probably would have expected the market to immediately sell off. That wasn't the case. We did see, we saw bonds really sell off, and we saw yields rise up. We're now almost 2.5 on the 2.5% on the 10-year in the U.S., up from at the beginning of the month it was 1.75, call it. So that's quite a fast move in the 10-year for sure. But we've seen the market handle it quite well. The one thing that that sort of coincides with Powell doing this, and I think we have a chart of this, which is the Fed's interest rate expectations. And what we're seeing now is that the market's looking for really almost 7.5 rate hikes coming through the next year, and we're expecting that the rate's going to be somewhere kind of around that 2.5% at that point in time. So you can see that the expectation for rate hikes continues to go up, and that would really only kind of take it to neutral as far as where the 10-year is. So is it possible that we could see even more rate hikes than that? Time will tell for now. My personal view is I think we'll probably see less than that, because I think we're going to start to see the economy slowing, and I think they'll probably have to back off a bit of their aggressive stance, because we'll probably see inflation start to come under control.
It's quite the dance they have to play. Powell came out and he said he will continue to hike rates until inflation comes under control. Is that scary to you, Bruce? I mean, could that get out of hand, or is it just saying until we have this in control, we will continue to do this?
Yeah, I mean, the scary thing is if you end up in a situation like you saw back in the 70s and 80s, where the term stagflation was termed, and that's where you're seeing slow economic growth, but you're seeing inflation. That's what the concern would be, is that if they continue to hike interest rates, it cuts off the market. It just becomes a headwind for the economy. And at the same time, you continue to see the inflation because of commodity prices not responding, and also for the demand for employees and wage pressure continuing to go up.
Right. And when you see so tell me if I'm wrong here. When you see rates go up, the bond market becomes more attractive for the investor. Is that right?
Well, if they're not in there, it does. If they're holding an existing bond, that bond's just got cheaper, which is not what they want. Most people want their assets to appreciate. But if you're not in the bond market and you're looking at, say you have your money in cash and you're looking at investing, well, now you can invest and get a higher yield than you would have got even at the beginning of this month.
Right. And it's been quite a few years of pretty low yield. So it'll be interesting to see how far Powell goes with that. Let's talk about consumer sentiment slumps. That doesn't sound good, Bruce. What's happening?
Yeah, I mean, we're, with this inflation, it's really driving consumer sentiment to hit levels we haven't seen in the last decade. And again, we have a chart for this, just looking at how much consumer sentiment's dropped off in the last year, and it has a direct correlation to do with inflation. When people are paying more at the gas pump, at the grocery store, it just means that they're, more concerned about the future and they have less disposable income to spend. And so, as a result, we've seen this drop quite a bit. We saw that initial, big drop when COVID hit because there was so much uncertainty. No one really knew what this meant. And then things recovered quite quickly. And now we're seeing a low that we haven't seen really since the great financial crisis in 2008, 2009 timeframe. So the consumer is a big part of the economy. If this continues, then it's going to have an impact on consumer spending and will have an impact on the economy. And, that probably helps out to a certain degree with inflation, but it doesn't help out with the economy and markets.
Well, and I guess the thing is that, I think most people, they've been under some form of health restriction over 2 years, probably wanted to run out of the house and spend a bit of money, whether that be on trips or, whatever that might be. And all of a sudden it's become incredibly expensive to do so. So it's a bit of an odd turn of events there. Let's talk about investor sentiment.
Yeah, I mean, we've talked a lot about sentiment, over the last probably 6 or 8 months. If you go back kind of 6 or 8 months ago, we were talking about how high investor sentiment was and how it was pushed to extremes, and it was really positive, and that's a contrarian indication that the market might be selling off soon. That, of course, is what we've seen, and now we've seen it push to the opposite extreme. So what we're seeing now is that investor sentiment's quite low. And so if you look at the chart that we have prepared here, this is again looking at the very bottom of this chart is looking at the American Association of Individual Investors, and it's their bear bull ratio. So how many people are bearish versus how many people are bullish. And well, in this case, actually the chart's the other way around. It's how many people are bullish, how many people are bearish. And you can see here again, there's been a few times when it's got this low, but historically it hasn't been this low very often. And when it does, it has been around a time when the market's forming a bottom, just because there's so much negative sentiment. And you can really kind of look across the board at not just the AAII, but if you look at the, Association of Active Investment Managers, if you look at, the smart money, dumb money, it's really the same data across the board. So while we can never, look on time perfectly with sentiment indicators, what it's telling us is that there's probably an opportunity if you look out, sort of 12, 24 months from now, based on where the markets are, where the economy is, and based where sentiment is, we probably see an opportunity here. And effectively, if you just think about supply and demand with the markets right now, with, investors standing back because they're concerned, it just means that there's less demand, less demand and more and sort of the same amount of supply. Whereas, if those investors come in because they turn bullish now, then the demand starts to get bought up and, stock prices go higher.
So is that when someone like yourself sees buying opportunities?
Well, certainly it's hard to time with sentiment, more so at the top than at the bottom. But, there are opportunities that have been created for sure. And this is just, one more data point that we look at to say, is it clear to be investing?
Amazing. Okay, let's talk about a new acronym. This one I like. FANG, it sounds so scary, but this one is MANGO. So I'll just remind our viewers, FANG is an acronym that refers to the stocks of 5 prominent American technology companies: Meta, Amazon, Apple, Netflix, and Alphabet, which used to be Google. These are 5 of the largest companies, I think, in the world. There's some of them anyway. And there's a new one that's out. It's called MANGO. It's an acronym for 5 companies that are in the semiconductor industry. So I had to look this up because I've never thought of semiconductors as an industry for investment purposes, Bruce. Maybe you have. In 2021, the sales of semiconductors reached a record $555.9 billion, and 1.15 trillion semiconductors were shipped, probably mostly out of China, to the market. This is insane. This is a huge market, huh?
Yeah, it sure is. And, a lot of people actually watch the semiconductor market to see what's happening with kind of the overall temperature of the economy. So, as semiconductors are being purchased and orders are coming up, that is positive. And then, vice versa, when things are slowing down, people aren't buying as many semiconductors, purchasing as much technology, and so then they tend to slide back. So it's a little bit of a leading indicator in a lot of cases.
Well, would it be a leading indicator for FANG?
Well, it could be for sure. Yeah. People look at it even from a broader basis of just technology. They look at it from an overall economic standpoint, but it could be for FANG as well. Yeah.
Yeah, interesting. Okay, CSE issuer news. So I want to talk about cannabis. I will start off. I'd like to get an update from you. It's been an interesting year. Well, it's only March of 2022. It's been an interesting past 12 to 18 months in the cannabis sector. So give us a little bit of an update of what's going on.
Well, sort of a revival again in cannabis here just in the last few days. And what that revolves around is there's some legislation that is to be tabled in the US. It's thought of as, some of it could be as early as next week, and then others are, kind of later on into April. And this is more moving towards that legalization. It's not legalizing it, but it's, little pieces. So maybe it's the banking, maybe it's the access to capital that's happening here. And so what we've actually seen is that we've seen, some of these stock prices really start to rebound. Interestingly enough, though, what we've seen is that, some of the U.S. Companies haven't actually performed as well as you would have expected. Some of the Canadian companies have performed better, and it just comes down to liquidity. So, we've talked a little bit about this in the past, and the access to stock by U.S. investors. Well, in the case of something like Canopy, they can access that. It trades a little bit easier for them, and so it tends to be more liquid. So you see more institutional names, whereas some of the MSOs, they tend to be a little bit smaller institutional ownership, and so as a result, they haven't seen the same amount of money flow. That's just a function of time. What we'll end up seeing is, investors start to like comb down and look through their holdings and look through opportunities. And then, that's where you'll see, a lot more opportunity. And we think that the MSOs, if this legislation starts to get advanced, could have, a fairly good move. And we've seen some of them already off the bottom from where they were.
So just to remind everyone, in case you've forgotten, if you touch the plant in the United States, you cannot be listed on a U.S. stock exchange, which is why the CSE has benefited from so many amazing, huge companies that have come from the U.S. because we allow them to. A Canadian cannabis company can list on a U.S. stock exchange because it's recreational and medically legal here. So, the big powerhouse of capital that's on the other side of the border, it's much easier for them to invest in Canadian licensed producers than it is these massive behemoth MSOs, which are listed with us here at the CSE. So it seems like it's a great opportunity. I mean, I just love watching these guys, and they keep getting bigger and bigger. So it's great to be their home, until that happens. And then, of course, the Banking Act is kind of, as you mentioned, they don't, again, if you touch the plant at a federal level, you don't have access to banking. And it's a very money driven industry. So it's difficult for those guys. I mean, you've told me a few stories from your due diligence time. It's tough for them to deal with that kind of money and not really have proper banking, right?
Yeah, it's a security threat in a lot of cases. I've been in facilities down in the U.S. where they have $500,000 in cash from business. They pay their taxes in cash. They pay their utilities in cash, and they still have this cash that's left over because they can't bank properly.
Unreal. So this would be very good for all of them if that went through. I wanted to, on the cannabis note, mention a new issuer with the CSE. And I wanted to ask you about this. So the CSE new issuer is Cannibal Food Tech. They are based out of Israel. We're seeing lots of movement out of Israel come to the CSE and come to the Canadian capital markets, which is very exciting. Israel's always been a great hub for tech. And I know that they're just bringing more and more stuff to the markets, which is very exciting. They are an innovative Israeli food tech company that develops and manufactures food mix products that are enhanced with hemp protein, non-active and active cannabinoids, where it's legal to do so. So my question for you, first of all, welcome, Cannibal Food Tech. Welcome to the CSE family. We're happy to have you here. Do you think we're going to start seeing more of the There was a moment there where kind of cannabis was going to gummies and it was going to, into drinks. Are we going to see more technology go into food?
Yeah, I think that continues to evolve, right? If you look at you look at anything as the market evolves, there's always new opportunities that exist, and we probably haven't seen the end of what that evolution and what the technology drive where it drives things.
Well, and you need a lot of technology to be able to incorporate it into food because, from my understanding, cannabis, I know it's not necessarily water soluble. So I think they really, a lot of technology is involved in, properly processing it into food. So congratulations, you guys, and welcome to the CSE. On the food note, I also want to mention the CSE, the Canadian Securities Magazine, has just dropped in March, and it's the food edition. So make sure you check it out. It's on our website and can be found online. Bruce, what should we think about going into next week?
Well, the things that we're watching again are interest rates. One, just because they've been pushed so far so quickly, we think that wouldn't be surprised to see them back off a little bit here. And then, kind of in conjunction with that, would be the commodities as well. So again, we've seen the price of oil's had a big move up. It's pulled back a little bit. It's been kind of consolidating here. So we're really watching to see is it start to accelerate again, or is it start to sell off? So those are a couple of things that we have our eye on for next week.
You know what? I actually want to make a point next week. I'd love to ask you a few questions about some commodities that have been of interest lately in the market. So I will ask you next week. Listen, Bruce, thank you so much for your time. I always learn so much, and I know our viewers do. I hope you have a wonderful weekend, and we will see you next week.
Thanks. Yeah, same to you.